How safe is your money? That's the conversation right here on the Trading Bell. Welcome to the show. We're going to host Hellen Chepkwony, who is the CEO of KDIC, who work a lot with the banks to ensure that there's safety when it comes to your deposits. Let's get straight to the conversation. Mrs. Hellen Chepkwony is the Chief Executive Officer of the Kenya Deposit Insurance Corporation, KDIC. She brings over 20 years of experience in leadership and management within the financial sector. She holds a Master's of Arts and a Bachelor of Arts degree in Economics from the University of Nairobi and has worked in both public and private sectors with a focus on building strong teams and improving processes to enhance efficiency and productivity. Before becoming CEO, she served as the head of risk and bank examination at KDIC, where she played a key role in the corporation's transition into a fully fledged state corporation and deposit insurer. She also previously worked at the Central Bank of Kenya as an economist and risk professional. Ms. Chepkwony is the Deputy Secretary General of the Africa Regional Committee and an Executive Council member of the International Association of Deposit Insurers. This reflects her contribution to strengthening deposit insurance both locally and internationally. Mrs. Hellen Chepkwony, welcome to the show.
Thank you very much.
Excellent, and thank you so much for hosting us here. And I would like to start from the basics because a lot of people can hear the acronym KDIC, and I would like to give you the privilege of explaining to us what KDIC is and how you are faring on when it comes to the banking sector here in Kenya in terms of your mandate.
Thank you very much.
Yeah.
KDIC is an acronym for Kenya Deposit Insurance Corporation, which is a state corporation that was set up basically to protect depositors. So our main mandate is that of providing deposit insurance to the public, the depositing public, through the commercial banks and microfinance institutions that they bank with that are regulated by the central bank. Currently, we have 52 institutions who are our members, whose money are protected with us. So our other mandate is to provide prompt payments in the unlikely event of a bank failure. So if in case a bank was to fail, we are expected to provide payments to those depositors up to the protected amount of 500,000 shillings.
Okay.
So that is basically what we do. And over and above the protected deposits, we go into liquidation and recover monies from the debtors of that failed bank and therefore pay over and above the 500,000 shillings that is automatically paid immediately when a bank fails.
Okay.
So basically under the KDI Act, we are supposed to, our mandate is to receive banks. We do receivership, we liquidate banks, and we wind them up at the same time. And we were set up as what we call a risk minimizer. A risk minimizer is a deposit insurer that ensures that banks do not fail. So we put so much of our efforts in early interventions or preventing banks from failing, because we understand that when a bank fails, it causes a lot of disruptions to the markets. So basically, I can just say in a nutshell, that's our job.
That's quite comprehensive. And speaking about bank failure, and that you are there to mitigate this, I would want you to explain a little bit more. When we talk about mitigating this, and this is good news to Kenyans especially, because now they know, because we have had stories sometimes, we've had banks that were there, we have names that are no longer there. How do you do this to mitigate this so that at least we don't have a repeat of those kind of times when we have had these moments?
So as a risk minimizer, what we do is that we have set up a point-to-point network with all our member institutions. So we receive data on a regular basis, on a monthly, quarterly, and annual basis
from the banks.
And we do analysis on those. We profile those banks to see the health of those institutions. So whenever we see banks is deteriorating, then we have interactions with them. And we have close collaborations with the Central Bank of Kenya, who are the regulator of these banks. And therefore, we look at ways of how they can be facilitated. And through some of them are through mergers and acquisitions, if in case an institution is not healthy enough and therefore are able to get an acquirer to avoid a situation where those banks are closed. So that is one area we look at the mitigation and interventions.
Yeah, and I love that because there's a lot of things happening in the banking sector.
Yes.
Anytime we look at the regulator, central bank, even talking to the Kenya Bankers Association, they're constantly in engagements, waiting to see what the central bank will say and the likes. And I love the fact that you have a role to play in that. But there's a statement that I want to qualify a little bit more because you've talked about coverage limit of about 500,000 shillings.
Yes.
I want Kenyans to understand what you mean by that when we talk about that figure per depositor per bank. Yes.
So we currently we have a protected amount of 500,000 per depositor. So what happens is when you deposit your money in the bank, up to 500,000 of your deposit within that bank is covered by KDIC. And that accounts for over 99% of all the accounts in the country.
Absolutely.
Yes, so they are fully covered. We have almost 99% of our accounts are fully covered.
Yeah.
So, but by value terms, it is much less. But basically, we were set up to cover for these small and sophisticated depositors, where at the time of 500,000, we fully cover over 90% of the depositors.
I know you have the reasons behind coming up with the figure of 500,000 shillings, but are there plans to probably even review?
Yes, we've listened to the public, we've listened to the banks, and we are currently in the process of reviewing that coverage. And what we have done is we've hired a consultant to look at the adequacy of our current coverage, so that if in case it is adequate, we do not change. But if it is not, then we'll be able to review the coverage upwards. And basically, the coverage is determined by the per capita income of our country, the deposit settings, in how the deposit levels are sitting in all the banks. And as I mentioned to you right now, we are covering 99% of the depositors. But we also need to consider the other huge corporate depositors as well, or the MSMEs, because these are institutions that they have more than the 500,000, and a failure of a bank really affects them. So we are considering all those factors in our review.
You're right. And I must say this, from my own perspective, when we hear of a bank going down, it's big news. It's really big news. But we must appreciate your role. And I wanted to bring in this question on some of the strides that you've done then. I'd like to hear from your end when you're talking about enhancing speed, transparency, and accessibility of payout processes.
Yes.
Let us know, could you walk us through some of these key improvements and probably innovations that you're doing to ensure this happens?
Okay. So let me start from the technology side. One of the key innovations is setting up of what we call the EDW, the Electronic Data Warehouse. So this is where now we have a point-to-point connections with all the commercial banks and microfinance institutions. That makes it much easier for us to access safely and in a timely manner the data, because we just pull from those institutions the data that we require, and it makes it much easier without any interruptions by anyone for us to be able to utilize that information for our access. We've also done mobile applications, mobile banking applications that are used by our debtors when they want to make payments to, the debtors of that failed bank who want to make payments for their debt. It's made much easier. We have also integrated with the eCitizen platform, where our debtors or our depositors, we are able to have our depositors be paid through our integration with the eCitizen platform and our mobile platform. Those are some of the innovations that have made it easier for our customers to be able to either be paid or pay for their debts.
In the advent of trying to encourage people to save, there's a lot of ways in which people are doing it. And the faster you can do it, the better. Otherwise, you will consume the money. So there's a lot of innovations behind how people can save, the apps, everything else, that at least to encourage people to save. And I'm curious to know, and many Kenyans as well are curious to know, is their money as well covered by KDIC? For example, if I save in a particular app or something of that sort, does your money extend to that?
Yes. Okay, let me start by saying that most of the digital value products that we have a backing in a trust account somewhere.
Yes.
So we come in as a deposit insurer, we consider the value in a trust account somewhere. So whatever transactions you are having on your mobile is backed up shilling by shilling with a real money somewhere, sitting somewhere.
Absolutely.
So that is where we come in. And we are currently covering those deposits for especially the M-Pesa transactions. And currently we are working on our law on the trust accounts, where banks will be asked to actually document the trust accounts that they are holding, so that each one of them is held on an individual basis. And therefore, even in the unlikely event of a failure, then each one of them will be accounted and paid for.